Hey guys, today we're going to be looking at Easy Properties. It's a property investment platform from the same guys that brought us Easy Equities. I've been looking at it over the last couple of days, and I'm going to share my thoughts with you guys. Um, I'm going to talk about what it is, the advantages and disadvantages of it, and whether it's something you should be using. So at a high level, what Easy Properties has done is basically replicate this concept of um, collective investment schemes, which is essentially a pool of money which they administer and use to invest in properties instead of you investing directly. So it's an indirect investment platform. This is useful to people that might not have access to um, enough capital to buy an entire property themselves. It's also useful if you can't get a loan, or if you don't want to uh, invest that much of your portfolio or that much money into a single property. You might have enough for a single property, but you might want to spread that, for example, R1,000,000 over 10 properties to achieve diversification. I think those are some of the advantages. The disadvantages are that, as you'll see closer to the bottom here, that they have, actually I'll go into my Easy Equities account and show you. At the moment they only have these 4 properties which you can invest in, so you don't have much of a choice over what property you are technically buying. You also don't have much control over it, which isn't necessarily um, a disadvantage, because with a sectional title deed you often have a body corporate that, while you might elect, does make a lot of these decisions and run a lot of the day-to-day business on behalf of you. And by giving up control, you do also give up a lot of the workload, which might reduce your returns. You'll see that some of these, or well, all of these properties actually in quite upmarket areas, which is low risk, but also a lower level of return. So if this does meet your risk return requirements, it might be good for you. The one group of people I think it isn't worth is if you do qualify for a good interest rate. I think that, and this is a personal opinion and it's not financial advice, but I think that you could, if you could get the bond, you're essentially leveraging the bank's money to make more money. Sure, it does depend heavily on the interest rate. Um, and yeah, beyond that, there's also the question of, are these things good value for money? Um, while they do say that they're buying it or they've negotiated it at a discount, um, I mean that that would be up to you to investigate. And they do also show, which I do quite like, is how much they charge. There's some interesting statistics here. Um, they show the increase in the property values in that area over time, and they do also show um, how much they charge for management, which is lower than expected. So I think that's good. So in conclusion, I think it's a cool platform. However, I do think it's too early to invest in. My big concern is that these aren't high growth areas. They areas in which have already seen growth, but with that lower growth, you can also expect lower risk. Yeah, let me know what you guys think about this. Also, if you have any comments, you can comment in the comment section, or I'm gonna drop my Twitter. And if you've gotten to the end of this video, please tweet at me and tell me what content you'd like to see in the future. Yeah, I've been thinking of doing a video on Robinhood. I've also been thinking of doing a series on how to invest in South Africa, so let me know. And don't forget to hit like and subscribe.